Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar has managed to rebound off the lows around 64.5 and now into its second bullish day looks towards the key level of 65.9095, which was the breakdown point. A clearance above there could give further guidance and up towards the 60-day moving average, which is seen around 60 to 85. Around this region, keep an eye on it, because last time we got close to this level, the market found good supply and may do so again. Given the fact that the market has managed to rebound and slightly holding to a positive case, still monitor this level of 65.9095 in case we do witness a break. As all eyes look to tonight's main event, being the US non-farm payrolls data. Elsewhere, the US House of Representatives passed a bill to suspend the government's $31.4 trillion debt ceiling, while investors still prepare for the US labour data. It is assessed that the market may find a weaker number into tonight, with the forecasts holding around the region of 193,000 jobs added, with the previous number higher. That was at 253. The unemployment rate is expected to tick up from 3.4% to 3.5%. Now, if we do get a weaker number, that would give further indication of a potential rate hold in June. But a greater number, or even matching last month's of 253,000, may strengthen the US dollar back again as it trades around 103.5 to the peaks of 2-month high seen around 104.40.50, and therefore would reinstate or give much call for a rate hike in June. So it is very important to see what these numbers are to give us the next step to the Fed's June 13-14 meeting. So with the market now back above 107, all eyes look towards that top side level, seen around 107.8085. The break above there would give further scope to 108.35, but I feel the market is getting a little bit carried away of itself and may find a possible bull trap lurking above 108. The dollar yen has put the brakes on as the market slide into the fourth consecutive session respects the lows of 138. I'm not going to get too bearish. Like previously we've seen here, the pullbacks are relatively shallow or short term, and therefore could see the market snap back to the upside and look towards that call that I'm holding around 141 to 142. Sterling still relatively strong as we now move into the fifth consecutive day. However, what's keeping the market rallying is that we are possibly expecting a rate hike from the Bank of England after its inflation data come out relatively high or mixed also. Nevertheless, we are potentially heading into a bull trap, therefore could see anywhere from 125, 35, 45 as an initial pause and maybe see a pullback. Wrapping up with gold and oil, the market has snapped through the level of 1,960 to 65 area and now puts a neutral bias. But for those trading, a break above 1,986 to 88 would give further indication to a 2,000 call. But like previously, and I still believe that gold outlook is overpriced and therefore anywhere towards 2,000 should struggle. I'm not a strong believer that the market will uphold this current 6-day rally and therefore could easily pull back towards a region somewhere at 1,950 or even lower to the bottom side of the range that was hit this week of 1,928 to 33. Oil also snapped higher as the market now turns to OPEC's June the 4th meeting with more reductions in oil. Therefore, a surprise cut would give us more indication of a bull run and look back towards $74 a barrel. Well, that's a wrap for the week. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to the new weekend.